Good morning, all traders, serious students of the market across the globe. This is Jeff Killian for the Vector Traders Consortium. The time is now 8:25 a.m. Eastern Standard Time. Today's presentation on the S&P Emini futures regarding our pre-market open analysis will be geared towards the most recent market turnaround to the upside after the market halted at or near this level right here with substantial volume coming in by the largest institutions, aka smart money. If you like what you see today, please hit the like button, subscribe to us, and share this with your colleagues and friends. Our actionable intelligence is geared towards the aspiring and serious person to be able to determine what is the current state of the U.S. marketplace every single day. This is the most important beginning step to have this completely mastered until we even consider the possibility of moving into real-time trading so we know what our bias is for the current trading session. So looking at this chart right here, the levels that have been laid out in the last 4 consecutive pre-market open analysis videos that are posted on our playlist on our YouTube channel clearly stated at this point the market was going to sell off, and every video along the way gave you a step-by-step presentation of how to play that. Now at this point, we talked about the larger contract sizing coming in right here. At this point, where we had a base formation and another one here, but not as heavy, so to speak. In fact, light as compared to this. So the market traded up on inflated highs, serious volume here for the sell, again here, and then finally it can't hold the pressure of the downward distribution that is about to take place of the prices moving down all the way until the shakeout becomes complete right here, and the date was 1/24/2022. Why? They had to shake out this level here and this level here with all the institutions that had their financial planners and all their serious traders with stops right below these levels, thinking that they were going to get in and the market was going to continue to trade short. Now you got to remember that these are the ultimate shapeshifters. These people are the smartest people in the planet that actually can and do control prices, the movement of those prices from one direction to another and how far they actually go. So the key here is to find out exactly what they're doing, when they're doing it, and when and where do we have any real business trading. So because the market tapped out here with the shakeout with the larger contract sizing here, which is basically the floor level that was created by the large institutions, we have a turnaround. What was the reason that that happened after the fact? This was breaks. That's it. There was distribution that came in on the beginning of the day, and then accumulation came in real strong throughout the day and on market close. That was 124. And that is exactly why the price stopped right there. Then market went net neutral, and it's now started to trade up. We're at approximately 45.0625, again on ES near contract month 322. The second thing we need to look at to continue with the proper flow is going to be the money flow index. Now, as you can see, we had the up movement that confirmed the price is trading up on some short-term institutional money strength, but in this particular session, we have a down tick. So the short money is out for this session, and the longer-term money on the Chaikin money flow itself is in. So you're looking at the baton being handed off from short-term to long-term money. The short-term and the long-term money started to move the prices up. Now the longer-term money is looking to take over. And if we continue the trend line to the downside, we're going to see clearly after the negative divergence that existed, again, which we talked about on one of the previous videos, we're looking for the violation, and we have it in play. That is not absolute, because it won't be complete absolute until the market closes today and actually its settlement price on ES and CM 322. But it is in play, which means essentially that according to what we have analyzed so far, that the market can be long or short today with a slight bias to the upside. We'll see how much volume comes in right after market opening, And if there is serious volume that comes in and it's clearly accumulation, then these prices should continue to trade up. Now remember, as they do, traders, we have to consider the possibility that there was larger contract sizing that came in here to drive these prices down. We have 1, 2, 3, 4, 5, 6, 7 days, a 7-day run. So as you move up and we get into the larger contract sizing, these are EOD POCs, end of day points of control, where the largest amounts of contracts were traded within these bars to act as superior resistance, which will need higher contract sizing in real time, whether on market open throughout the day and market close, in order to be able to drill up through those levels and continue to move to the upside. The next thing I want to take a look at real quickly here is the relationship of the SMI. See how we tapped out below our negative 20 level here, and then turned back around with the cross from below to above the actual momentum line. And we have no look back so far. So from a price-based indicators standpoint, only based on the actual closing prices, okay, the trend has officially changed as well. And on our end, this is the fastest indicator we have in our arsenal to be able to confirm the change of the trend from one direction to the other. In this case, right, that the market is officially tapped out on the downside, and we are, for an at least, we are long today's session. Our official VTC Smart Money bias market trading call for the session is now long level 6. And it won't get any stronger to the upside until we get serious volume to come in real time, market open, end of day to drill through these strong POCs to the upside where the market sold off. We called it to the short. It happened out. We advised every week along the way. And now we're in a position to be able to say, yes, we're finished for now on the short. And we are currently, again, our smart money bias market trading call, long level 6. Again, if you like what you're seeing today, and we feel that you are due by the amount of emails that are coming through and the interest in our course material and mentorship programs, you please give us a like and subscribe to us if you're not already. Share this with your colleagues and friends so that they too can learn how to trade as a professional in a fraction of the time. This is Jeff Killian for the Vector Traders Consortium. My pleasure to present to the world today. We'll pick it up on the next video. Be careful out there because, as always, the key to longevity as a professional trading in the markets every day is risk mitigation.